Welcome to LendGo's Mortgage Mastery Podcast, the ultimate guide to mastering your home financing journey. In each episode, we bring you expert insights, practical tips, and real stories to empower you on your path to financial freedom. Welcome to another insightful episode of LendGo's Mortgage Mastery Podcast, where we break down complex financial concepts into simple, actionable insights. Today, we're delving into the world of VA loans, making home ownership more accessible for our military personnel. Stick around, it's going to be enlightening. First, let's talk about the incredible benefits of VA loans. They're designed to make the dream of owning a home in the U.S. more attainable for those who served. How, you ask? Well, here are the key perks. Number 1, no down payment requirement. VA loans offer a distinctive advantage in home ownership by eradicating the traditional down payment requirement, a substantial obstacle for numerous aspiring homeowners. This unparalleled feature stands as a beacon, setting VA loans apart and rendering the dream of home ownership more attainable, particularly for our esteemed military heroes. The absence of a mandatory down payment diminishes financial strain and redefines the landscape of possibilities for those who have served. This innovative approach ensures that veterans and active duty service members can embark on their home ownership journey without the burden of accumulating a substantial upfront payment. By eliminating this significant hurdle, VA loans extend a gesture of gratitude and support to those who have selflessly served the nation. This unique facet of VA loans amplifies a commitment to providing accessible and inclusive housing solutions, acknowledging the sacrifices made by military personnel. In essence, the no down payment requirement features of VA loans symbolizes a pathway to the American dream, tailored to honor the dedication and service of our military community. Number 2, competitive interest rates. VA loans stand out in home ownership with their competitive interest rates, making a significant advantage for veterans and active duty service members. These favorable interest rates redefined the landscape of long-term borrowing costs, making home ownership a game changer in terms of financial sustainability. The competitive nature of these rates ensure that veterans and active duty service members can navigate the housing market with affordability in mind, translating into substantial savings over the life of their loans. Number 3, no PMI requirement. VA loans redefine the home financial landscape by eliminating the need for private mortgage insurance, or PMI, a distinctive feature that sets them apart from the conventional loans. Even without a down payment, VA loan borrowers are exempt from the financial burden of the PMI, translating into lower monthly mortgage payments. This absence of PMI requirements is a significant relief for many borrowers, as it directly contributes to reduced financial strain and increased affordability in home ownership. 4, flexible credit requirements. VA loans stand out with their compassionate approach to credit requirements, recognizing the unique financial situation of military personnel. Renowned for flexibility, VA loans provide a more inclusive path to home ownership by accommodating individuals with less than perfect credit scores. This understanding reflects a commitment to supporting veterans and active duty service members, ensuring that the dream of home ownership remains accessible regardless of credit history. The flexibility in credit requirements is a testament to VA loans' comprehensive and considerate nature, making them a valuable and inclusive resource for those who have served our nation. 5. Government backing. VA loans are bolstered by federal government backing, adding an extra layer of security to the home ownership journey for our service members. This crucial support instills confidence in lenders, promoting them to offer more favorable terms. The federal guarantee minimizes the lender's risk, resulting in better loan conditions for borrowers. The steadfast commitment of the government to support service members and veterans in the pursuit of home ownership underscores the significance of VA loans as a reliable and accessible pathway to achieve this American dream. All right, now that we've covered the fantastic benefits, let's focus on closing costs. What are they and how do they fit into the VA loan picture? First, the closing cost overview. Closing costs encapsulates the diverse expenses, concluding the mortgage transaction. This term includes survey fees, credit report fees, loan organization fees charged by the lender for processing appraisal fees paid to assess the home's value, expenses related to securing title insurance, fees for managing the escrow account. Understanding these components is pivotal, offering insight into the financial considerations involved in the closing process and facilitating informed decisions for buyers and sellers in real estate transactions. Secondly, let's look at determining closing costs in a VA loan. Deciphering closing costs in a VA loan requires a comprehensive understanding of the various fees involved in the mortgage transaction. Essential components like survey fees, credit report fees, loan organization fees, appraisal fees, title insurance, and escrow fees play a crucial role in shaping closing costs. This awareness empowers borrowers to navigate the intricacies of a VA loan, making informed financial decisions and strategically decide how these overall expenses will be distributed among the involved parties. All right, so the big question, who usually pays closing costs in a VA loan? The answer is not set in stone, and the VA provides specific guidelines. Let's break it down. First, we'll look at the buyer's responsibility. In VA loans, while benefiting from cost-saving features, the borrower does shoulder specific financial responsibilities. This includes mandatory elements like the VA funding fee, which is vital in sustaining the VA loan program. Additionally, prepaid items such as homeowners insurance and property taxes are upfront costs managed through an escrow account. Allowable fees explicitly permitted under VA guidelines like appraisal and credit report fees are also part of the borrower's responsibility. Understanding these components ensures a transparent and well-managed financial journey for individuals pursuing home ownership through VA loans. And now let's look at the seller's responsibility. In VA loans, sellers can contribute up to 4% of the loan amount toward the buyer's closing costs. This concession from the seller's end serves as a valuable financial resource for covering various expenses associated with closing. This plays a significant role in determining who bears the closing costs, and it facilitates a more flexible and negotiable landscape in real estate transactions. So the seller's contribution to closing costs adds a layer of financial adaptability, enhancing the overall feasibility of VA loans for buyers and sellers. And now let's look at what the lender is responsible for. Lender credits present a strategic alternative in VA loans, offering borrowers a unique way to manage closing costs. Now, in this scenario, the lender agrees to cover some or even all closing expenses in exchange for a slightly higher interest rate. This approach can be advantageous for individuals seeking to minimize upfront costs during home buying. However, it comes with considerable long-term implications, as the higher interest rate may lead to increased overall borrowing costs over the life of the loan. Balancing the immediate benefits against the extended financial impact becomes paramount for borrowers exploring this avenue. Closing costs can be negotiable, providing room for a more favorable distribution. Effective negotiation can lead to substantial savings for veterans and active duty service members. Unlike fixed expenses, closing costs are negotiable, allowing buyers and sellers to optimize their financial arrangements. Effective negotiations in this realm can lead you to having substantial savings, a significant advantage for veterans and active duty service members who navigate the VA loans. Understanding the potential for negotiation is key. Buyers can explore various options, including negotiating specific fees or seeking concessions from the seller. On the other hand, sellers may find value in contributing towards the buyer's closing costs to facilitate a smoother transaction. This negotiation process involves open communication and a willingness to collaborate to achieve a mutual beneficial outcome. It's an opportunity to tailor the deal's financial aspects to better align with the unique circumstance of each transaction. So whether you're a veteran exploring home ownership or an active duty service member navigating the real estate landscape, don't underestimate the power of negotiation in determining who pays closing costs. It's a crucial aspect that can lead to a more favorable distribution of financial responsibilities, making the VA loan experience even more advantageous for our military heroes. As we conclude, remember that understanding who pays closing costs in a VA loan is important, and LendGo is here to assist you on this journey. Our platform connects you with competitive lenders, ensuring you secure a VA loan with the best possible terms, including favorable arrangements for closing costs. Let's make home ownership a reality for our military heroes. Until next time, this is LendGo's Mortgage Mastery Podcast. We hope today's journey into the world of home financing has left you inspired and equipped to make informed decisions on your path to financial freedom. Remember, your journey doesn't end here. To stay connected with the latest tips, trends, and success stories, be sure to hit that subscribe button. Don't miss out on upcoming episodes filled with expert insights and practical advice tailored just for you. For even more resources and exclusive content, visit our website at lendgo.com. Until next time, take control of your financial freedom. And remember, your journey to financial freedom is just beginning. Subscribe, visit our website, and join us again next week. Happy financing!